All the greatest gains in life, in wealth, relationships, or knowledge, come from the magic of compounding interest. That is, amplifying small gains. All you need for abundance is to keep adding 1% more than you subtract on a regular basis. Kevin Kelly. My friends, that's what we focus on every day, are those small gains. Using the STC, switching from red to green or green to red, and jumping in, making sure that you're going short when you're below the 200 EMA, which is clearly marked on all of our charts as this gold line, and going long when you're above the 200 EMA. We also use the success multiplier formula, which is a formula based on 1 point for where the STC is on the half-day chart. And of course, since the 2-day chart is 4 times the size of the half-day, 4 points for that. And since the weekly chart is 10 times the half-day, 10 points for that. That shows us how those other waves are compounding in the pressure, either up or down. So it helps us out, helps us feel better about going short or going long. How have we done this year? Quite well. Since the beginning of the year, we're up 5.27% for the S&P. That is both up and down, whether you're going short on SH or you're going long on SPY. We're up, let me see here, on the NASDAQ 100, 11.15%. Whether you're going long on QQQ or short on PSQ, that's a single inverse on all these. And on bonds, 5.34%. Short and long, that's TLT for long, TBF for short. And again, on average, we're about 50, right about 50% of the time. But how do we then multiply that into success? We are looking at a 2-to-1 risk to reward ratio. We set that at our average true range. It's all very simple, very easy to follow, makes sense, and works. I urge you to practice trade with us. Whatever you do, don't start spending money. We're not a stock calling service. We're an education firm. Want you to train with us. Want you to apply what you're learning here to your favorite stocks and ETFs. Verify that they are trackable and tradable. And then practice, practice, practice till you get perfect. Now, let's jump into these charts. What do we see going on? S&P 500. Of course, we are down on the 2-day and the weekly, so we're negative 14. What are we waiting for? We're waiting for it to go from green to red. It tried to do that earlier today, and then, of course, the market pulled back after trying to hammer down first thing in the morning. It then sort of relented on that. Wasn't super strong, so we don't have a crossover going down yet, so we're still just sort of hanging there. We've got 2.5 days of down moves, just waiting to, again, see if this is going to be sustained. Oh, by the way, markets are closed Monday. So again, we're going to have a shortened trading week in the States for the 4th of July Independence Day holiday, which I hope all of you enjoy. Now, let's move on to the Qs. Where are we on the NASDAQ? It actually did cross over. Again, it pulled back a lot. Also, don't know where this trade is going to go, but our rules go ahead and get us to jump in. I mean, we are right there, at the jumping out point, even after jumping right in. So we'll be very careful to see how this goes for us. We may be pulling that first thing in the morning on Friday, but the rules are the rules, and we'll see how this goes. One thing that, of course, makes you hesitant from the beginning is when you don't see a drop like this where things immediately drop down, they go sideways, showing you that that is a very weak position to be jumping into. But I went ahead and did it on the practice trade just so you could see it and so we could practice it and see how it goes and learn from it. That's what we are all about here. Learning by doing, practicing, obeying the rules, and see how they work for us. And of course, on the Qs, 11.15% already this year. Not bad. Not bad at all. We're still negative 14. Well, I'm sorry, negative 15 now that we flipped over. So we're as negative as you can go on the NASDAQ 100, below the 200 EMA. And of course, our weekly and 2-day are red also. What about 20-year bonds? They're up for the day, 0.88%. Now again, we are well below the 200 EMA. What are we waiting for here? Waiting for things to die off and roll over going down. We're only a negative 10 on this one because, of course, the 2-day is going up to the weekly is still down. Although as we look at what's happening on the weekly, we can see how bonds have gone down and then pulled back a little bit. Dropped now, pulled back a little bit. So we'll wait and see just where bonds go for us. They've done fair for us this year also, 5.34% up for the year in 1, 2, 3, 4, 5 trades. And in fact, in bonds, of our 5 trades, 4 of them have been winners. 1 of them has not been. We didn't get a 2-to-1 risk to reward ratio on all of those. 2 of those we got a 2-to-1. We cut our wins back when we started getting red candles on 2 of those trades, and then 1 was a loser. But overall, 5.34%. Not going to throw that out the window. Nothing like the Qs, but not bad for us at all. So what are we waiting for on bonds? Waiting to see if they're going to roll back over and head down again. Now let's move on to gold. We are in this move on gold down. I wasn't super excited about it because some of these prior gold down moves had failed us, but this one is doing all right now, heading down toward that 1.72% gain we hope to get. And again, set that 2-to-1 risk to reward ratio. Things rotated over, and of course we jumped into it. We'll see how that works for us. And we don't have an inverse fund in gold. Yes, there isn't. There are inverse funds. DGZ is one of them. Delta Juliet, Delta Golf Zulu, DGZ. But again, I don't like it because it is way too illiquid. What I mean by that, I mean the spread between the bid and the ask is way too high. I don't want to jump into a trade where I've got to make up a big spread before I can even start making money. So I don't find myself shorting gold unless I am jumping into puts. And again, the way gold has been lately, I'm not risking puts on that. I'm doing just fine on TLT, QQQ, and SPY and their inverses. But we're waiting, and people say, well, then what are you waiting for? Why are you tracking gold? Because I know at some point gold is going to turn around, and when it starts to rocket up, we're going to be here and we're going to be ready for it. So that day is not today. It is down. We are short in that practice trade. So let's move on from, just to show you where we are on the 2-day, it's red, and the weekly, it's red. So where are we on gold? A negative 15, just like the Qs. Lastly, we go to Bitcoin. We look at the Bitcoin ETF, the Van Eck, and the reason we always track the Van Eck has the lowest fees. This is a short-term Bitcoin future, and again, I like it because you can buy it on any stock trading platform. You don't have to go to a crypto platform, some of which have been having a lot of liquidity and other issues. This is an ETF approved, again, in America for our markets. I have bought it in the past. Of course, I'm not buying it right now because down again today, 6.83%. Look at that, $18.27 a share. No thanks. I'm waiting for Bitcoin to recover, which hopefully it does at some point in the future. In the meantime, I got lots of other stuff to trade. I urge you to use what we teach you here to backtrack, practice, trade your favorite stocks, your favorite ETFs. The lessons we give you here are usable on any ETF or stock that is chartable and trackable. That's where we are, my friends. So glad to have you with us. Patreon members, we'll be putting out our 20 weekly vertical crossovers as soon as this show is done and uploaded. Check the Patreon page and or your emails. And again, if you're not a Patreon supporter, we would love your support. If you appreciate what we do for you each and every day, please like and subscribe and share us with your friends. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.